Good afternoon, everybody, and welcome back to another StockTwits Q&A session. I'm Brittany Umar. I'm going to be joined by Scott Red Dog Redler in just a minute to answer your questions live. First, we're going to show you a quick video. It's going to give you a sneak peek into Scott's trading world. Check this out.
I'm in a little MGM and I'm still in OIH. I bought it this morning at 107.50. Apple's good. You don't buy in the first 5 minutes of the day.
I live in Jersey City. I was born in Long Island, went to school at SUNY Albany. As a firm, we are 5 partners and I'm one of them. I am the strategist that puts the game plan together for about 400 traders. I kind of command that army. What's going to make us money with that is on a day like today, if it's up or down 3 handles, that's when you see where other money is really getting put to work, and that's where the action is. You held 1,600 the whole time?
I got 1,000.
See, that's a growing experience for you, brother. All of the traders trade our money, so they have to be right. They have to say, okay, I think Apple's going from 260 to 265, and if they're right, they make money. It's a good setup. Stick with the win. Okay. It's the right trade. Don't watch it so close. Relax.
Scott's coming on in a minute, so we're going to listen to Scott.
Scott, technicals first. Market looks good. Volume seems a little light. What do you see?
Right now, the market's behaving very well technically.
Let's talk to this guy. Now, here's a guy, Scott Redler, who does nothing but technical analysis, but puts his money where his mouth is because he's got a firm and his partners put their money in every day and trade on technical analysis.
I'm not looking for a home run. It's not a get-rich-quick scheme. If I'm able to pick the direction of the market, I could book a winning trade and I could provide for my family.
Where's the breakout? That is the next evolution.
Welcome everyone back to the StockTwits show. I'm here with Brittany Umar. Thanks for coming again.
Oh, you know it.
You know we do this every Thursday, and every Thursday it seems like there just has a lot goes on. So today, Big Ben came, he spoke. They were definitely a bit more accommodative than everyone would have thought, and the market blasted off. And we're just getting questions left and right, so we're just going to start right here. So, Brittany, do what you do best.
All right, let's take it away with Pete Perlman asking, Scott, we've had a hell of a move already. Do we keep going higher from here?
Every time everyone keeps asking that question, it feels like we can keep going higher because no one wants to start buying up here. But anyway, it's been a hell of a move, and it's been very methodical. It's been very technical, and every time we've measured the chart patterns, it's kept indicating higher prices. And yeah, do you chase price here at 1460? Probably not. Can we go higher? Yes. But if you look at the chart of the S&P, we've had so many different types of patterns here for you to get involved. Okay, this was, the red dog reversal back on June 4th. Then you had your move off the lows. Then you had that commitment to the move off the lows, right? We didn't just fall back down. That showed some buying. And then from there, you had a higher low, higher low, higher low. Then remember when we accelerated on August 3rd, which made, August a lot of fun to trade from the long side. Then you had this little outside day, right? Pushed through this 1422, and it couldn't quite go. Considering the move that we had, nothing really to worry about. Then the last 2 weeks of August, we consolidated, the market tightened up. Every bear in the world was talking about how we were stalling, how we had to come in 10-15% in September. Meanwhile, last Thursday, pow, we broke above 1414, which was an area. We then cleared this this prior resistance. I've talked about 1422 to 1426 so many times. Then after we cleared it, what did we do? We hovered. We created another bull flag. We showed commitment up here above this breakout. Didn't even give bulls really anything to really worry about. Then today, Big Ben came on and pow, up to 1460. I think the high of the day was what? 1463. I bet you the bears were all, clapping their hands that we were 4 handles off the highs. Anyway, if you take a quick look here, the bigger pattern that we talked about is the cup and handle. Okay, so there you go. Here is the cup. There is your handle. Some say that there is a measured move to this type of pattern. And if you look here, some measured from the bottom of the cup, some, a little bit further in. So just say from 1300 to where we broke out from at 1420, that's 120 handles. So 120 handles from 1420, that gives you, what does that give you? That gives you 1540. So, I'm not saying it's going to happen, in the next 3 months. It could, because everyone's saying to me, today on Twitter, all around, like, Red Dog. In August you said, 2012, 1450 to 1470 is your objective. Are you going to raise your objective? Are you going to, sell into this? Are you going to tell people to get short? At this point, when we put out potential targets, it was based on more macro charts, and it was actually before this whole cup and handle pattern put itself together. So when you get to your target for year end in September, you don't always have to raise it, but when I look at this pattern here, this tells me, 1520 is definitely doable, or 1540. I guess it could happen this year. Maybe it happens into the first quarter, but overall, the trend has been up. Every sector that we've been watching has been breaking out, from healthcare to the Russell that everyone was complaining that was lagging is at highs. A lot of things are at highs. A lot of leaders making historic highs. So much to like as an equity investor, a macro investor, an intermediate trend trader, and an active trader. So a lot of people have declared the equity market's dead over the summer. It's far from dead. You just have to learn how to approach it.
Well, with that being said then, Kronos, who also wants to know if we're going higher, who doesn't, says with QE out of the way, do we keep going up, or is it technically licensed to short? So would your answer then be no to that?
I would say at this point, take it as it comes. Don't just have short on the brain. Everyone just keeps wanting to fade this rally. So we've been saying, don't fade the rally, trade the rally. So what that means is you follow the money. You manage positions. You stay with your trade. You use a tier system. If you go back and you look at the chart of the S&P, I'll go more to the weekly chart. You go to the weekly chart, and this looks like it's just breaking above this pattern here. So again, from what was this, about 1260 to 1420, here you go. You got to go to the monthly chart, and you will see we've talked about this also. Talked about, I think on Jim Cramer's show back in the first quarter, we talked about 1700 by 2015. Well, here you go. Look at this outside day that happened back in 2009. Look at this higher low, higher low, higher low. Look at these higher highs, and we just made a higher high. So the reason why I had 1470 as my upper end was because there's that point of reference right there, 1471. Here you have, this double top, which comes in around 1570-ish. So it does seem like we are on the path to take that out, and typically once you do take that out after a 12-year consolidation, it just doesn't stop there. So that's why I say probably by 2015, it's, in my opinion, I think 1700 or higher is definitely doable.
Oh, okay. So on that note then, Caesar663, hey Scott, thank you for your great work. I know it's too soon to ask, but he's going to anyway. He wants to know if you have an idea for new levels on the SPX in the near future. Okay,
well, depends on your time frame. So in the near future, we already came to one of our objectives, which is 1450, 1470. At this particular point, if you want to break it down a little bit, I'll show you right now. Let's go back to the daily chart. You go back to the daily chart, and what you try and do is you try and measure this along the way to see what type of speed we're going to have. Here is actually, remember this September low, boom, boom, boom. Anyway, at this particular point, you now had a really strong day here. Remember, we wanted to measure the strength of this breakout. We held above it. Now we'll try and measure the strength of today. How do you do that? You see how much of today we hold. So if we hold the top third of this and consolidate, then we'll know that the commitment is still there. Potentially sometimes you come back and you retest levels. If you get back more than half, all of a sudden, it might start to negate some of the bullish locked up momentum, and then obviously where we broke out from. I want to show people something from the 5-minute chart though today, because a lot of guys, were like, how did, it happened so fast? How did you handle it? Da, 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 da. Look what time this was. Okay, if you knew back at the daily chart that here is your flag, this is 1440, here is your resistance, right? 1440, there's your support there at 1429, that if you were short, thinking that we were going to sell off on the Fed, you had a few moments to cover. If you were thinking about getting long and you were in like tier 1 here waiting for confirmation, you had this spot to get into tier 2. So you go back to your 5-minute chart, look at this. You had some time here. You had some time to cover your shorts. You didn't have to just, ride this all the way up from 1440, 20 handles or so. And then also, if you're looking to get long, you could have been long in here and added to your favorite stocks like a lot of guys on our chat room did. And then we trended higher all day long before, coming off a little bit. So I would say you're looking at this chart short term, again, like we said before, this area would be something very healthy to hold. I think we're probably going to have to do some work above 1452 to 1455. If we do that, I see no reason why we don't then take out today's high and then continue higher, because again, we're going up. Europe seems to have a framework. They have a plan. We now have QE, so everyone's going to start talking about don't fight the Fed. Sometimes after Fed day, there's a slight chance the next day you get a little bit of a reversal. So we'll watch those levels to see. And again, you sell excitement, you don't chase it. And most of today's move was probably guys rolling up their shorts, from the summer, from who knows when. So today at the close was not the day to initiate new longs, even if we go higher. Entries and exits still matter.
Here's one from Timmy saying, is today's bounce buyable, specifically in Amazon, eBay, and Google? Or should we wait for a possible pullback as it happened in 2010 after QE2 was officially announced?
Well, there's a few different questions
Yes.
there. I personally like all three of these stocks, and they've given you many different types of patterns. And for those who follow us on Twitter, let's talk about Google first. Google came in this, into this year as it was my high beta stock pick of the year for performance based on the macro charts. First 2 quarters didn't act so well. Then finally this quarter they came out with good earnings after being accumulated during the whole year, and then you had multiple entries. More recently, yesterday, guys in our chat room were really excited because we've been targeting the 8-day and the 21-day moving average. Typically, the fastest, strongest stocks out there follow these moving averages because they're high up, so they don't let them, they don't let these come in. So we wanted to see if that remained the same. And yesterday, Google pulled into 681. That was your buyable dip. Today, above yesterday's high, was another type of trade for momentum. So if you go to the chart, 2 different types of trades. One right here as it pulled in to the 21-day moving average after making highs. So anyone who chased it over 700 the first time might have got a little spun around on this pullback. Here was, when we listed it off the charts as a buy after earnings. This was your earnings gap, 620. Then again here at 645. Then above, just say, the highs of the year, which came in right here. So just to show you that, there are different ways to approach it. So anyway, here's the channel, and here is the prior high, and this is when it went above and continued. So anyway, here is your buy the dip at the 21-day. And then, guys, today we're targeting yesterday's high because for it to have continuation, for it to have motion above this price point, which was 694.91, that was your second buy. Some swing traders bought it here and they're still holding it and they're up really nicely. Some active traders probably bought it, took it home and sold it. Some guys who went home flat didn't have to own it. It was down a few bucks and you could have bought it when it went positive through this. So lots of different ways to play it. For the macro guy, I do not think the high of the year is in, and I think ultimately this 747 will get tested, will get taken out. So something to like for every different type of strategy. And now, what were the other 2 stocks that he mentioned?
Amazon and eBay.
Amazon, didn't even pull back to the 21-day. So it shows you why it's already at new highs. So, strong stocks that came back to their 21-day look good, but strong stocks that didn't even get there, went to the 8-day, are probably at highs. And if you look here on Amazon, Amazon has been very good. Oh, by the way, this is the macro chart of Amazon showing you that if you're a stock picker, you actually can make money in the equities market. Yes, you can. It's not dead. It's far from dead. You go to your daily chart, though, lots of different types of entries. Here's 230 on earnings. Remember when it cleared this downtrend? That was your swing long. Here's your retest. Here's your add as it cleared this area. Then it trended holding the 8-day. And oh, look what happened here. Made new highs, controlled 3-day pullback to the 8-day, then pow. So at this particular point, keep managing your position. If you buy a dip like you could have yesterday, congratulations. If you like to play for momentum as they're in motion, you could have done so today when it crossed this little trend line. And, it looks really good. And as far as eBay is concerned, 2 good earnings quarters, 2 big gaps. It's continuing its momentum to the upside. You look here, we talk about gaps for swing traders. Look at this gap up. Took a long time for it to hold it to continue, and then you had another gap up. This time didn't take as long. Look how long it took this time to consolidate. This time it broke above, held. And this one looks really good. And what's it doing? Holding the 8-day moving average. Not the 21, not the 50, the 8-day. So keep watching that for speed and composure and stay with this trade. It acts well.
All right, let's talk Apple. Shadow Desk asks, what level should we watch both on the upside and on the downside in Apple? Which options are the best way to participate in either side?
Apple is interesting, right? They usually sell it off. Everyone says they sell the news, but meanwhile they sold the product announcement 2 days before. So that got a lot of people uncommitted out, and then they got a lot of people short. And I know it wasn't easy, because even yesterday we were going a little bit back and forth, but we were talking about levels and we were talking about the bottom end of the channel. As long as that bottom end held, that momentum would stay there. And then in the last hour, stock took off. A lot of us jumped on it, held it today. It's a great day and a half trade. I'm there with you guys on the virtual trade floor. You saw it green all day. giving you conviction to stick with it, to hold for a 14-point move besides just active trading as a macro investor. You've been so rewarded, and I don't think that you should do anything with it because we're going to be seeing a 7 handle there soon. But anyway, you look at the chart pattern here, and look how healthy it looks. Look at this was after missed earnings because they didn't have their phone ready. Came in 3 days, pow. Big move, commitment to it. You could have got your swing trade here, and your momentum trade as it added through the 644 high. Then it started to get a little wishy-washy. Remember, they sold the news real quickly on Samsung, so it caused a little bit of a pullback. Then you went back to the highs, and it wasn't showing any momentum because people were still worried what's going to happen with the product release. When is it going to be able to be pre-ordered? When could you go to the store and buy it? Those questions have been answered. So 2 days before, pow. But what did it do? It didn't hold the 8-day, but it held the 21-day, showing you momentum was still there. And it also combined with this floor. And then it closed strong, opened up really well. It's right now closing at historic highs. At this point, trade them and trail them is what I call it, what I say. I'm still long it. I think, you have a lot higher prices in the future here. I know. We were just talking before, you're like, I'm not used to using something that's not an Apple. I'm walking around with an iPad and an iPhone, and I'm going to get another iPhone. So I see people with broken iPhones waiting for a new iPhone. I don't think anyone's going to a store and going from an iPhone to a BlackBerry. And I think a lot of people who are on the BlackBerry probably are on the train a little bit embarrassed when they're looking at it. And then I also, look at the Droid. People like it, but they don't love it. So I think this is going to be the biggest adult Christmas gift, holiday gift ever. We talk about like when, are you too young to know about the Cabbage Patch Kids?
No.
No.
I'm well aware of the Cabbage Patch.
Well, you talk about like crazes for the holiday season for kids.
Yeah.
Well, I think the iPhone 5 is going to be a craze as a holiday gift for adults. And I think even like 12 and 13-year-olds are starting to get them, and and that's crazy. But anyway, let's go back.
All right, how about we switch things up and talk gold and silver? Ken R. says gold and silver spike higher after Bernanke spoke today. This has not been the case the last 3 months. Has there been a change in the trend?
There was a change in the trend on August 20th and August 21st when it ignited. That's when the trend changed, and that's when you could have started buying the dips, and that's when no one, hopefully on my floor, at least you really didn't see me short gold once since this, because I said sometimes stocks are extended doesn't mean it's a short. And the potent move out of that range in silver and gold was enough for it to continue. So anyway, you look at the chart of silver, look at this thing. This was the day that it ignited, and I want you to remember this date. The date right here was what? That was August 20th. Ignited above this very tight pattern. Gave you a beeline move all the way up to a trend line. Held there, waited there, pulled back to what? The 8-day, okay? Not even to the 21-day. Then went again, and then what did it do? Continued again, consolidated, and boom. Your last buy price being once it cleared this 32.79. So at this point, you look at silver, it's above this long-term trend line. Okay, so this was a great buy price. Here was another buy price, and now it's in motion. And your next resistance to watch for silver is about 36.17. And for gold, remember we talked about the 20th for the first day up. If you trade things together, I know that day I'm like, ooh, let me take a little bit of gold because silver just woke up. And look what happened here. This didn't even break out yet. So you had a chance to actually get in there. This was the 20th, so you took some and gapped up, on that 21st. Nice little move here as you pull back to the 8/21. You could have then added right here when it broke above this. Then PS, before the Fed came in, someone tried to smash it into the gap. What did it do? It held the 8-day, and then here was your chance to rebuy it or cover your shorts at 169. And now go back to your macro chart on gold, and you'll see, it's heading into some resistance. So trading out of some right into here makes a little sense, considering the move it's had. But there are a lot of gold bugs out there that are saying this high here is not the high, and at this particular point, gold and silver on the move, and if you're trying to short something, this thing could set you on fire.
All right, well, we're going to give Red Dog here a little bit of a break. We're going to take a quick commercial break, and then we're going to be back with Mark Sperling in the hot seat, so keep the questions coming. We'll be right back.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side. We're
back answering your questions live. This time we're joined by Mark Sperling. Mark, we got a question right off the bat for you from Star Chart saying, Mark Sperling always buys calls. How far ahead does he usually buy them?
It depends. Sometimes I do it at the money, that month's strike price, or 1 month out. I don't really go much further than that. And I know a lot of people, naysayers, say you should be selling premium. I don't disagree with that. It's just a matter of timing. My strength is my timing, so I can take advantage of a lot of the advantages options have, which is obviously less money, more power in there, and my timing normally is pretty good. But the understanding that the premium gets sucked out, well, certainly on a weekly basis and even on a daily basis. So you just have to make sure your timing is in tune with what you're thinking.
Here's one from JC asking, how does Bernanke's decision affect two stocks in particular, MCP and REE?
It doesn't. It's quick, plain and simple. It doesn't. You guys on the chat love. I talk about an idea. I talk about a stock, and everybody just like mentions it back and forth. What happens when you get into a strong tape, a bullish tape, which we're getting in, and we're not even quite even in that craziness that I think it can become, because there's a lot of naysayers out there. The stuff that is heavily shorted, the stocks that really, quite frankly, have been forgotten, come back to life. And technically, it was now, it's harder to see on this chart, but it was trading above its, 10-day and 21-day moving average, which it really hasn't been for a while, and they were both curling to the upside. And then today, it had some news. I don't think it read unbelievable, but it was enough to get the stock moving, decent volume, above 13.20, I think it is. You're going to get some shorts that are going to get a little scared. And, whether it happens tomorrow, happens next week, happens 2 weeks, it seems like it's in the cards. It's just how these stocks move. You got to be patient with it. It is a little bit more difficult on the day trading side to really just maneuver back and forth. Today was a day you actually can make money trading it because it did have volume. Look for the volume to attach to some of these moves.
All right, we are getting a ton of questions about Facebook. So what are your thoughts on playing Facebook right now?
I think it's still day trade. Yeah, even today. It had a great day the other day, which we were talking about. I talked about. I haven't played it in 6 weeks. I bought it, went long. I'm net long in my swing. I bought it in my day trade. It looks good. Again, does it give you the ebbs and flows that everybody necessarily wants? No, but you just have to increase your time frame a little bit. I think that's the reality. Looks like it should hold 20. Should hold probably 20.50, but give it another day or two of basing, maybe tomorrow at some point. You'll probably see it move back to above 21. But as long as it stays above 20, I think it's going to try to create a new higher level base that eventually moves it to 22.50, and we'll see what happens after that.
All right, Distant Light asks, thoughts on Duncan? Dog in July and August, but perking up as of late and reclaimed the 200-day moving average. What do you think?
Duncan looks pretty good to me. It's certainly not the leader it was for a little while, but I talked about it around 30. It was a tight little pattern that we see right here, probably around 29.50. It's fine. Is it an A-plus trade? Absolutely not. Is it a leader? Absolutely not. But like I said, you're going to go after. I like getting stuff at the low end of the trading range when it actually starting to look good and set up decent, and then you're going to get momentum. So I think momentum is going to kick in at some point. You're going to get 32.50, 33 possibly, and then you'll have to wait and see what happens. As long as the tape remains relatively on the strong side, I think this stock will eventually regain some leadership.
Excellent. How about Exxon? Briscoe asking, Exxon broke through 90. Take profits here, or we set up to test new all-time highs?
Well, the key, once you get to yearly highs, the daily chart really becomes a little useless. You got to go back to minimum your weeklies and even possibly your monthlies. So let's look at our weekly first. To me, it looks like it could possibly test that, yearly high in 2008, which looks around almost 96, 97. So I think you have a little bit more room on a longer time frame. Shorter time frame, 2-3 days up. The rule of thumb is take some trades, certainly lock in some profits, and maneuver accordingly. If you have a longer time frame and investing standpoint, it looks great, and obviously I know it pays a dividend also. So it's a leadership stock.
Excellent. Okay, Market Picker asks, Spurls, what are your thoughts on the beaten down stocks ANR and ACI? They've been basing for a while and trying to break higher. What are your thoughts?
They look okay. They look like they're getting some, ANR, just again, I have not traded it against $5. Did move 30%. Percentage-wise, you just got to respect the fact that a $5 stock moves to 7 or a $5 stock moves to 8. It just moved 30%, 40 to 35%, whatever the number is. And that's a big percent move, understanding where it came from, much higher. They're beating up stocks. I'm not necessarily, so bullish on these type of plays, but I think over time they probably work themselves higher as long as you get a strong tape. But I'm still going, you go after the leadership, guys. Don't go after always go after the dogs. You can have some dogs in there, go after the leadership. That's where you're going to get paid and make some real money.
All right, JC asks, is JVA likely to join the rally?
Well, I'm not sure if it had earnings or something yesterday. I do forget, but it looks good. And it's now trading above its 200-day, which I do like. As long as it holds its 200-day, I think it's buyable. Buyable against 790 at this point in time. I think it could get back to life. I don't know the cover story behind it, but at the same time, we see what is happening with GMCR and some of these other, Starbucks certainly gaining some strength. So why not? But again, it's all about prices and understand it's not the leader.
Okay, Azuli, here's a different one. How can I follow your strategy given that I work at a prop firm and my default is limited because of my small risk?
Well, come work at our firm, and then you can sit near me if you trade with any sort of size. No, your default was what? I'm sorry, I got thrown off.
Limited because of the small risk.
Risk is all relative to, your pocketbook, I guess, and it's all relative to what you can handle. So just because you can't risk the same amount of money, bigger traders do risk. The reality is you can still be in the same ideas, you just got to be in less size, and you have to. I think the key to trading right now is longer holding time. I don't think the momentum game that we all traded with, and I've been doing this 15, 16 years, that everybody loves the back and forth and all that. I think it's changed, and if you're not adjusting to that change, you're going to really have a tough time. It's not easy. Again, teaching an old dog new tricks is very difficult, but I think if you want a career in trading, certainly right now, I think you have to adjust accordingly, and that's the key.
Or get a job here.
Or get a job there.
STL Trader is saying, on days like today when we see such huge gap ups intraday, how do you feel about putting on some cute shorts just for cash flow? Cute
shorts, that's a Redler. Enough with the cute shorts. How I like to do it, I've been talking about trying to find a true hedge is really a much better way of doing things. But I put some spider puts on just to know that I have some in the back pocket. I'll gladly lose them, just for the fact of I know I'm mostly long. It's good to hedge. It's certainly good. It reduces risk. Your book should never necessarily be, especially if you're holding a portfolio, 80-20. That's definitely putting some risk on as we keep moving higher. But at the same token, if you're just a short-term trader and you're dealing with the ebbs and flows of the market, I don't think you need to hedge as much as everybody talks about. When you hold positions, it's much more important to hedge. When you're just trading, not as important.
Okay, well, speaking of hedging, Big Brown says, how do you determine the size of the hedge you put on? For example, the spiders, a certain percentage of your long holdings, or something else?
You should put a certain percentage of your long holdings, yes. And like I said, spiders isn't going to correlate with Google, Apple, and Amazon. Or Q's isn't even going to correlate as efficiently with a Google, Apple, Amazon. So you got to figure out a stock, a strategy, writing calls. This is where the writing calls against some positions might come into play to properly hedge versus being long all the high beta stuff that a lot of times I am. You got to be a little bit smarter with it.
Okay, here's one from Manax saying, now that the dollar will continue to weaken and oil should spike, any oil plays you like?
I continue. I've talked about APC. I mentioned that a few times against 71, 72. Looks like it's good. Looks good and looks like it can go a decent amount higher. 80, 85 could be in the cards. EOG to me, one of the best in breed. PX, and it had a good day today. PXD, and obviously something that we mentioned earlier on, Exxon, Chevron. Go with the big boys. That's where the money's going to be in those oil sectors.
Okay, here's one from Jackson LaSalle saying, thanks for all you do. What do you think of the action in NGVC?
Well, thank you for that. I appreciate it. Hopefully it helps. I'm assuming this might be a new issue because I've never traded it before. New issues are a little difficult. Right now it looks like it just put a catalyst bar in that it can actually probably work itself higher. I don't know the stock. Not a whole lot of information for me to really dictate what it should do. Bar was green today. Nice igniting bar, possibly can grind a little higher.
Okay, speaking of new names, Market Picker says BLMN, a fairly recent IPO, not talked about all that much. He's a very specific question. He wants to know. BLMN. Wants to know, what do you think about a tier 1 long with a stop at 14 and an add above 1460?
Good, but probably give yourself a little more room. I would say 1390 to 1380 would be your stop. You got to give yourself a little leeway on that side. It looks good. Looks good.
Okay, Insider Up, LinkedIn. Wait for the 8-day to catch up?
Yes. The quick answer, yes. I think it seems like it needs a little bit more time to catch up. Minimum, let the 8-day, let the 21-day try to catch up, which is 116 right now. So maybe another day or two. It looks good. And 116, 117, I think, is the sweet spot for the stock.
How about MM? Boxer asking, what are your thoughts on MM? It's been climbing for 4 days now.
My rule of thumb, any 4-day quick rally, I take some trades, especially after the move we just had. And this is now coming into resistance. If it's for real, I'd like to see some back and filling in the stock overall, which means it could get back to maybe 1250, 13. And that would be a place to probably add to your position if you really like the idea. And it looked like it did break it down, a longer-term downtrend. Obviously, it's a new issue, so you just got to play it accordingly.
All right, Mark, thanks for all your help. We're going to let you go take a quick break, and we'll
quick.
be back. Right? Yeah. I know. Time flies when you're having fun. We're back with Scott in just a minute.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back answering your questions live. Back again with Red Dog himself. Welcome back, buddy.
Thank you very much.
All right, so anybody who follows you on Twitter, watches Morning Call, knows that you say the phrase trade 'em and trail 'em.
Yes.
So we have one from Green Dog here.
Right,
Red Dog, Green Dog. Yeah, saying, when you say trade some and trail some, do you trail by a percentage or how do you determine the amount?
Well, I determine it depending on where the resistance is and kind of a little bit of a feel. So when you own it and then it trades through a level, and you add to it, and then it goes, and you want to book some, you trade some, and then you trail some. So this way, you could stay with the trade. Because, like yesterday, Google was a great example of, trade them and trail them. Some guys were looking to, buy versus the 21-day, and then just look for a bounce as a day trade. Some people were saying, you know what, I think this is a great swing entry. I sold into the excitement above 700 when it hit 712. I think that this is a pivot low. And some guys who take it for a day and a half are like, okay, I bought some, I'm going to add some above because I think even Sperling was talking about adding above 688. Then it went to 692. So if you bought it at 682, you added at 688, why not sell some at 692 and then get comfortable again? So you just traded them and you trailed them. And if you go back to the chart of Google real quickly, and I'll show you, on a 5-minute what I meant here. So here's, okay, so this was the low. This was into the 21-day moving average. So, remember when I tweeted, I'm like, I am buying Google here at 681. Didn't say I'm going to use a stop because I had conviction here. I'm like, and I'll add at 675. So this was, tier 1, okay? And then once it finally traded through, what's it called? I think this was the spot right around, what were we talking about yesterday? I think it was right around here. Here it is. Right around that 86, giving confirmation to this low, you could have added. So tier 1, tier 2, then all of a sudden you're back at 690 after a 9-point move. So you bought tier 1, tier 2, you're trading them, and then you're taking a tier 1 and you're trailing them. And this way you book some profits, feel good, and then then you continue along the way. Or even today, if you would have taken tier 1 home overnight, then all of a sudden, once it busted above 697, which was another resistance right here, you went from tier 1 to tier 2. Nice move. You trade some. Okay, so you're back to tier 1. You just booked some nice money, and then you trail some, especially if you think you want to stay with it, that at some point it's going to take that high out, and then even longer term take out that, and that could be with some time. So the term trade them and trail them is you never really know exactly where they're going to go. So if you hold some for a bigger move and then you add some at price points or inflection points, you then could book some, so you feel decent and comfortable that you put some money in your P&L, but then you're also letting the market work for you.
Now, how does this compare to the 80-20 trade? Because this one comes from Jenny the trader saying, Scott, could you please explain what a 80-20 trade is?
An 80-20 trade is a way to do a counter trend move after a stock's been really beaten up to buy a potential low. But instead of like catching a falling knife, and instead of like just buying and buying and buying and buying, because people who've done that have been put out of business. The same way after stocks had a big move to the upside and you're trying to catch a cute short or whatnot, it's just a way to enter a short position with a plan where you're not just shorting and shorting and shorting and shorting, because that blows you up. So an 80-20 trade or a red dog reversal is really like a hammer bottom or a hammer top, or a way to find an outside day for a trend change, or sometimes it's a trend change, but sometimes it's just like a cute trade. So, but you never know when you get into it. So I think, what stock was I talking about this morning that was a good red dog reversal? Well, let's just say Macy's, for instance, because I remember that one. So if you go to Macy's, you go to the daily chart here, this was like 2 red dog reversals. First of all, you look here at this massive move that just say Macy's had, right? Following the trend, following the trend, following the trend. Then what did it do? It broke out here and failed, right? So that right there is a bit of a red dog reversal. So if you were looking for it, a short after a big move up, what you did is it traded through this high here of 41.74. Made a new high, so chasers came in, shorts got squeezed, and then it closed below it. So right there, that is your short entry. Right there with this as a stop. You didn't know, it could have been just a 3-day move for some people, or it wound up being a much bigger move to the downside. So that was a trend change where you had a calculated risk of getting in here. There's your stop. I think, what is that, 40 cents for what turned into a big move to the downside. So on the flip side, look at this downtrend, came all the way down, and then finally at the lows, it broke through this important support and came back above it. So that's your swing long. Okay, it broke below this area of 32.70. Okay, made a low down to 32.30. So you got long here with 30 cents as a stop, calculated, because if you try doing it here, look, this one was a little different. This one gave you a 2-day move before. So if just say this is a great example, because here, you bought some, and then on this day you sold some. So you traded them, you sold some, and you trailed them, and then once it got below this area, you got stopped out. So the longer term trade here didn't work, right? It wasn't ready yet. All you got is a cute little 2-day trade. But then here, when it went through, came back above, you could have traded some and then trailed it. And then on this trail, never violated this, and you could have trailed it all the way up to here, which lasted for 5 days. This one lasted for 2 days, but it was calculated. There's your stop. This one lasted for 5 days. Then here you even really didn't need to get out of it, but I'm sure you probably would have here. And then, boom, look at where it went. And then finally, today I said that I didn't like the way this was acting, and look what happened today. But anyway, red dog reversal is a great way to find a counter trend trade that could turn into a great cash flow trade for an active trader, or even a swing trade that could last for a few days, or it could last, multi-months. But it's calculated. That's the main thing. It's calculated. You're not catching a falling knife to look for a long, and you're not shorting a move that just gets you, gets you crushed. Because I tried shorting Goldman Sachs a few days ago. I caught the bank rally pretty well. We talked about buying J.P. Morgan, 37.45, the call spread on Bank of America, then buying it at 8.30, and then Goldman Sachs. There are guys who right here, started, this is the day that I started shorting it, right? I started shorting here, I added there, and then I said, you know what? I'm going to give it to the highs here, okay? Because it's, because I'm not going to keep fighting this thing. Now we were long here, a little bit long in there, sold it a little early. So right here, when I had like 6, 7 longs on, I'm like, you know what? Goldman Sachs is probably going to, pull in. So I'm looking for a cute short. What happened here? You had a day and a half. It pulled in a little bit. And then once it crossed this area, I said, I'm done with it. I'm out. I'm stopped out. I'll lose a little bit. Now look what happened. There are guys who started shorting here, and they're probably rolling it up, and they're not sleeping well, and it's aggravating their day. Why have that aggravation? You tried it versus a level. Nice bull flag continuation. This was your breakout. Here's your continuation, and this has been an impressive move. So now tomorrow, maybe you get a red dog reversal. Maybe it opens up down, trades through the high here of 121.05. Squeezes people chase, and then it goes like that. Then you get a cute little short, perhaps, and then maybe it finally corrects a little bit, with the market, because look at the size of the move that it's had. So again, you don't want to just, you can be put out of business if you try and find the top. Let this pattern find the top for you or the bottom for you.
All right, let's revisit Apple and talk options. We have a question from HL Stock saying he's new to the VTF following the red dog.
Nice.
Working with small resources, cannot buy 100 shares of Apple. Do you have a strategy to buy options instead?
Sperling trades options a lot more than I do, and I guess I have the luxury of having a nice trading account where all these stocks are very expensive. And I would say, I guess, when a stock's going to break out on on a level in the actual stock, then you have to buy calls. I guess buy straight out calls, and when they trade them and trail them the same way. There are definitely a lot of strategies for options, whether it's a call spread, whether it's the vertical spread, a leap spread, all these things. I can't give you an exact strategy, but Sperling kind of trades options like he trades stocks. When he thinks a stock's going to break out, he'll buy some calls in the base, and then when it breaks out, he'll add some, and then as it goes, he'll sell some, and then he'll trail some. And he's using options because it's good, because he doesn't look at the inside market of what's going on, and it just helps him hold things longer. So he almost forgets that he has them, but he has them on for a reason. So there's a good way to incorporate options into your overall trading plan. And as you can see, he trades a lot of them. I do trade them from time to time, but again, I have more money than sometimes I put to work. So for me, I just go straight up with the stock because I don't have to worry about the premium, the time decay, all that kind of stuff. But I use options at earnings season, because again, I don't take a lot of stocks into earnings. I don't need that kind of risk. So I take in the money calls, or I do some kind of strategy. And guys were saying, like with the strategy in August about the banks. I said, you might not want to trade the noise of a Bank of America, but as we set up for a fourth quarter move, I think you can go to 9.5. So I think the call spread we said was buying the December 8s and selling the January 9s. I think it cost 60 cents and you could make $1.50. Well, today, Bank of America went to 9.40. And there you go. You just made 150% or so in this move. So if you were buying calls, just say you did a little bit in here, right? And then once it broke out, you add to it, and then on this day you sell some and you hold some. If you're doing a straight shooter buy in calls, or which I've seen people call it, which is just directional without a spread. But same way, you buy 20 contracts here, it gaps up, it's in motion, you buy another 20, and then here you have 40, you get back down to 20, and you see if it can go higher.
Seems like you just answered Tim Burns, who said, thanks for all you do for us. You and your associates are great. Do you buy options? Why not if you don't? It seems like you only buy stocks.
Just again, I'm a cotton napkin technician. I don't need to make it too sophisticated. At times I do buy options. During the summer, when I wasn't sure if the uptrend would continue in July before the jawboning by the ECB Draghi, I didn't want to be short the spiders, because I'm like, anything could happen overnight and I don't feel like getting squeezed. So just in case we do fail, I'll buy some puts. And you know what? They went worthless. Big deal. My risk was premium paid. For me, I'm not as spread out as some other traders, because I'm doing the media, I'm on TV, I'm on my bicycle or at the spin class, whatever it is I'm doing. So I don't need to do options, and I don't need to have the more things going on. But I probably should. And maybe that's something that I'll look into, where, as I take more risk or I expand my buying power, options as a hedge is good. I think if you have a trading account and you like your longs, there are great ways to sell covered calls at areas, in order to not book profits on your stock and get the capital gains, but just trade options around it. Like today, for instance, if you were long Bank of America, because I know a few guys that are long it, so let's go back to Bank of America. Okay, after a really nice move, right? From 8 to 9.40, there are guys that said, okay, you know what? I'm going to go sell the January 10s. They were like 50 cents. So here, you're basically getting 50 cents in your account. Stock right now, so it's basically like you're getting paid to hold it now. If you were going to sell it here, why not just sell the 10s for 40 cents? Or even, I think the 9s were like $1, so this way you're protected to 9. And then if it goes to 10, you got that money in the middle. If it goes to 10, you're covered until 10.40. So from here to here, you're getting an extra $1, and you just have you're trading the range. And then if it goes to 10, comes back in, and you want to stay long Bank of America, and it doesn't go above 10, you keep the 40 cents, and then maybe you need some time, and then goes into it the next year. So there are definitely ways to use options as hedges, use options as just trading vehicles. But that's probably a question for guys who use it more than I do. I could just tell you a little broad stroke.
All right, well, that's just about all the time we have for Q&A today.
Really?
I know, it went by fast, but with the action that we saw today, just closing thoughts, how are you heading into tomorrow?
Right now, I think 3 longs and 1 short. And I think that if you're going to hold positions, why not hold a hedge? So, in August, I actually, was holding probably 7 to 8 positions with the hedge. And I feel like, I called it the Godfather market, because every time we get to levels and I'm like, okay, I want to pare down my risk, things set up and I just keep getting back into multiple positions and I just keep staying involved. So what I would say is, like, I don't expect too much, but if things start to put themselves in place, go with it. Every day we come in, I'm not expecting anything, and then all of a sudden you get great rotation, you get stocks that just pop up that you can make money with. Facebook, for instance, was a great little setup in the last week, where it went from 18 and change to 21. Now LinkedIn's kind of setting up. We'll see what happens there. Every few weeks, something else is getting active. In August, I didn't know the metals were going to wake up, and then all of a sudden the metals woke up, and that became a great trade. So at this particular point, and one thing I did say on the Twitter sphere is that, if you didn't buy the October 4th low, or you didn't buy, the June 4th low, or you didn't play the acceleration on August 3rd through 1375, if you didn't play the breakout last Thursday at 1415, you really had no business chasing price up here at 1460 or so, even if we can go higher. So at this point, I've been saying, keep 1 foot in the door, 1 foot out the door, but don't close the door shut, because the equity markets are far from dead. And today we're closing at multi-year highs. So if you're an equity investor long term, you're rewarded. If you're a stock picker, there's a ton of them, that Mark showed you, I showed you, that you could make money with. And then also as an active trader, as long as you're following the trend, there's more than enough things to do intraday to make money. Just figure out where your risk is, what your time frame is, stick with it, don't trade out of your means, don't live out of your means, and you can't control federal policy. You can only control your lifestyle and how you approach the market, so get over it.
All right, well, that's it for us today. Meet us right here next week. Have a great night.